Oh man, so Lunar Classic rockets again up as much as 30%. What is going on? I think I've got to the bottom of exactly what is going on with Lunar Classic as well as Bitcoin, which is fallen under 20,000 again. I'm going to be sharing you the latest patterns in both of those charts, plus what I'm doing in this market and the key levels to watch out for. Don't forget to hit up the like button. Don't forget to subscribe. As always, if you want to trade any of these moves, you can do so using BitGet. Links in the description to check out BitGet. No KYC, no VPN, and a great exchange for you guys to be either dollar cost averaging or trading if you choose to trade. Now here on Bitcoin, you can see on the chart we're now heading for our fourth red day in a row, down 1% again, and now you can see this latest daily candle has wigged below 20,000. Let's head on over to the hourly chart and let's head on. And what you'll see is we wicked as low here as in the 19,000s, 875. And then we're getting a little bit of green candles trying to bounce. Now, why is this 20,000 level so critical? Well, I'll show you. When we zoom out, you will see yesterday that I shared with you an Adam and Eve pattern with neckline along this green line of 20,000. Now, what that means is you have an Adam pattern. You then have a curled Eve. And this suggests a breakdown to the downside, okay? And if you take the measured move of such a breakdown, the measured move of this breakdown, roughly speaking, from the point of impact, from breakout, will give you a price target of 18,200, okay? So that's what we're looking at here if we break to the downside. But I don't want to get too carried away. That is the most likely scenario. We are in a bear trend. We have to respect the trend that the trend is to the downside. But at the same time, look at the head and shoulders pattern. Remember the head and shoulders pattern. I know most people have given up on this pattern already, but that's exactly what experienced traders would want to do. When I was at an investment bank, this is what traders would want to do. They want you to forget that a pattern exists, and then that pattern will come into fruition. So this was the head and shoulders pattern. We did break out, and then we just had no momentum, and we rolled all the way over here, right? Creating our Adam and Eve to the downside. But we've not lost our neckline. Look at that. When you extend the neckline, there's no coincidence that the fight right now is at that 20,000 level mark, and it's a very important fight between the bulls and the bears. Now, either we're going to get volume to the downside, in which case we'll head down towards the 18,200 target. If we can bounce from here, then you can go retest 21,700 and potentially keep the head and shoulders pattern alive, because then this would simply be a retest of a neckline, which is normal in the pattern of a head and shoulders. Just to show you the schematic of an Adam and Eve pattern, there's your Adam, there's your Eve. Even when you break out to the downside, if we lost 20,000, it could retest from the downside as well. So what that means is even if the head and shoulders pattern breaks to the downside, so that even if this Adam and Eve does this, does the Eve, breaks past 20,000, it can also do this before then going down to 18,200 as well, okay? So we want to monitor that as well. Now, if you've not watched my videos from yesterday, make sure you go and watch those, guys. I was on something yesterday. I'm definitely drinking some energy drinks yesterday because we did a stablecoin video, deep dive into which stablecoins you guys should be parked in. Make sure you go watch that. Also did a deep video into am I bullish or bearish on this market? And we go for a whole bunch of on-chain metrics, technical analysis, fundamentals to arrive at my conclusions. So if anybody's uncertain about where I sit with this market, go and watch that video and you'll be caught up on exactly what I'm expecting in this market. Now, what's going on with Lunar Classic? I know that's why you guys are here. What is going on with this coin? Why are we moving so crazy in a bear market when Bitcoin is down? Some solid altcoins are down. How is Lunar Classic continuing to move? And we know the answer. What is the answer? The answer is this is a community-driven coin. Okay. Now, I know some people like to call them meme coins. I don't like to really call them meme coins. I like to call them maybe momentum coins or community-driven coins or social coins. I think that's a fair name, because to call them meme coins is to belittle the movement behind it. And the way I like to think about it, and I never used to have this view. I used to think all meme coins were trash, and if anybody was trading them, that's trash, you know. But I started opening my mind and saying, hang on a second. Why are people in meme coins? They're movements. They've done the marketing part of a great project, but they just haven't built the white paper part of a good project or have the technology of a good project. Now, equally, you get other projects with really good tech, but they haven't figured out the social or marketing. So in that case, will that project ever come to fruition? Will it ever be a good project? There are so many projects out there with better tech than the tokens you and I sometimes talk about, right? But they're not as high on the market cap. because they haven't figured out the social, the community, the part of feeling that people want to have when getting involved in a mission. So this is definitely a moon mission by the community involved in the Lunar Classic community. Some of you watching this. So we can't belittle that, right? We have to respect that that's what's happening, and then we have to look at it and say, okay, what are the opportunities here? Now, the other thing which we have to acknowledge, and it's easy for sometimes certain people who have made wealth in crypto or have a certain net wealth, who have certain businesses, to again belittle this. But there are people out there who first came into crypto because of these massive pump options, right? 20%, 30%, 40%, 100%. They want those kind of pumps, and they don't want to wait for a Bitcoin to give them, you know, a 10%, 20%, 30%, and then fall back down. They don't want that. They want it to be in low market cap, crazy coins, momentum coins that can literally moon overnight, right? We've seen it time and time again. We don't need proof around it. And this phenomenon isn't just for crypto. This happens in penny stocks all the time. Not everybody wants to invest in blue chip companies like Amazon and buy the S&P. You get people who trade and buy penny stocks because they want to multiply their wealth quickly. And to an extent, I understand that. If you're lower in the pecking order on some sort of wealth, at times you may want to play with a little bit of money to invest in smaller coins, you know, hoping that it could then give you a return. Now, what is important, what I don't want people to do is if you're new in crypto and your understanding of crypto is only something like a Doge or a Shiba or a Terra Classic now, then that's a problem, right? Because what you need to do is understand how real crypto works. But if this is your gateway into crypto, then we need to embrace you, right? We need to show you how, if you want to trade Terra Classic and you want to get some of these, and you want to play with some of these coins, you can do so, but you can do so in a safe manner. And then once you've figured out that this was a momentum coin, then please do come and figure out how to build a portfolio, how to allocate your funds in blue chips, in mid caps, in low caps, and how to diversify your portfolio. But we can't just ignore these people and say, oh, if you're trading a momentum coin, then suddenly, you know, we don't accept you in crypto. I think that's the wrong way to go about it. And we're going to alienate more people than we bring into the market. So definitely that is what we're seeing here is people, whether we like it or not, in this boring market right now, they want to get some crazy returns. And that is when you see moves like this. We saw it with GameStop. We saw it with AMC. We saw it with Dogecoin. We saw it with Shiba. When the markets are moving down or sideways, sometimes you can just get these crazy moves where the retail are bored, they want to make some money, they want to make some bit of quick money, and they get behind a project like this, which is great for them, right? Why not? Who's to deny them that when huge hedge funds do much worse manipulation than this on a daily basis on major projects, major companies, right? If some retail want to get together and trade Dogecoin or Shiba or Terra Classic, good on them. Now, what are we seeing here in the wider market? Let's move on. And now we had the Fed's Mester speak yesterday. And what Mester said was she expects that we could have another 75 basis point hike in July. So she's saying if the conditions remain the same, if we don't see any meaningful improvement in inflation, if we don't see anything happen to the labor market, then at that point we could see another 75 basis points. To reduce it to 50 basis points, which would give the market a rally, we would need to see some meaningful improvement. She also said recession was on the table and that we're in a very delicate position, which we completely understand. Now today, guys, really important day. You've got Jerome Powell speaking, and then you've got Bullard. Bullard is a hawk. He could say something which can shake the market, as can Powell, who is obviously the boss, and the market will hinge on whatever he says as well. So definitely something to look out for. You can see the major indices in the US opening up flat. I mean, literally the Dow Jones is just 0. You got S&P futures 0.08, 0.14 on the NASDAQ, and very tentative, right? The market is just sitting in this no man's land, trying to decide where are we going to go from here? Do we want a little bit of a relief rally, or are we just going to go straight back to test some lows? And at the moment, like I showed you on Bitcoin, it looks like it wants to try test some lows first, but I'm still not ruling out the head and shoulders pattern, which could give you a relief rally up to 26. But even in that relief rally, I'm not getting caught up to think, oh, look, we're going to go back to the moon. We're going to go create a new bull market, sorry. Even if we do get a run up to 26, I'd fully expect us to still come back and test lows at some point. But so far, now we're seeing the Adam and Eve pattern start to form. And in that pattern, what we would suggest is you'd then be going back down to test the lows here from the bottom, the local bottom at 17.5. For those who want to see the on-chain metrics to map up with this, go watch my video from last night. I go through all the on-chain metrics of why we could be seeing one more flush down to really get that full capitulation before we can then go sideways for a period of time. Because remember, all the major bear markets, you've had a period of just being at your lows for a while, which we've not had here. And then you can see a bull market form after that. So that is what I'm seeing based on anecdotal evidence and empirical evidence from the past. Okay. Other thing worth looking at, oh, I forgot to mention with the Luna burner, by the way, you've had 1 billion burn of Luna. So a lot of people saying, oh, it's because of the burning, it's because of the burning. I mean, that is 0.016 of the supply. So you'd have to be you'd have to be burning a lot more than this, up in the trillions, before it starts having a meaningful impact. And that is why the movements you're seeing from price are more community-based and momentum, which is driving some of the movements in price. Also looking at the index of consumer sentiment. This is the Michigan index of consumer sentiment, and you're seeing this continue to decline. And this is one of the worrying signs for the FOMC, and particularly Jerome Powell and the team, because if this continues to decline, this is the consumer sentiment. This is the average person on the street. When you ask them, what do you think about inflation? How low is inflation? How high is inflation going to be in for how long? They don't feel pretty good right now. I mean, this is the lowest readings you're seeing for a very, very long time, which is showing that the average consumer is really feeling it right now. They're feeling it at the petrol pump. They're feeling it with their mortgage payments, with interest rates going up. They're feeling it with their car lease payments. They're feeling it with their grocery shop. And when they do that, what happens is consumers start to delay purchases. They start to delay purchases because they fear inflation and reduce their expenses. And that is not great for the economy. That is what can nosedive you into a recession. Again, we speak about this yesterday, where I show you how the S&P and Bitcoin is currently relative to previous drawdowns and compared to the Great Recession, the dot-com bubble, and all those other deep recessions we've had / depressions in the past. So there you have it, guys. An interesting day. Let's see how this day maps out, but it looks like we're heading for another potential red day here on Bitcoin, which would then be our 4th one in a row. You can see here we're having a little bit of momentum. I bring out the EMA ribbon, and you can see that's kind of cooled off, and the bears have taken control quicker than expected. I mean, every other time you've seen us kind of take a move to the downside, we had to run into our EMA ribbon before the bears go, But this time, we've not even got towards our EMA ribbon, and already the bears are saying, nope, we've rested. We're ready to push you back down again. Here we go. That is why I was pretty convinced that maybe we go up to our EMA ribbon, at least around this area, right? 24, 25, 26, before the bears goes, we're going to continue on our way to the downside. So that's what I'm watching out for here over the next few days. As always, guys, thank you for watching. If you appreciate this type of content, don't forget to smash up the like button and subscribe. If you want to trade any of the moves or dollar cost average like I do into a sensible portfolio, you can do so using BitGet. Links in the description. They'll give you 10% cash back right away. It's a really good exchange, even if you're in the US. No VPN, no KYC. Really straightforward to use. Definitely consider checking out BitGet. Thanks for watching this video, guys. Go watch this one here, and I'll see you in the next one.